Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Before we get started, just wanted to remind everybody to support us if you have a chance or if you can. Even $1 helps, and we have a link in the description to a website called Buy Me a Coffee. It's just a way to donate to us and support us. Again, any amount is helpful so that we can keep putting out content. And there's also other ways for you to support us in the show notes to this podcast or on YouTube in the description. In today's podcast, we're going to be talking about some recent news that came out about layoffs coming out of KPMG in the United States. There was some breaking news from Business Insider. It came out that KPMG is going to lay off 1,400 of their U.S. employees, and they have 35,000 employees in the United States. And the layoff is going to be 779 people across tax, audit, and advisory, and the remaining people appear to be back office people. And this is most likely EAs, executive assistants, HR, because the less people you have, the less HR people you're going to need, and probably other people like mailroom people. That's not enough, laying all those people off. They're also going to cut pay for 125 tax employees. So this is a pretty big thing. So this is a pretty big pay cut and layoff. Reportedly, KPMG said this is due to COVID-19, which is pretty interesting. I mean, this is pretty huge because we weren't expecting this early, because we just got all the financial releases of E&Y, Deloitte, and PwC, and they still had growth, and KPMG did really well in Australia. And they got a lot of blowback in Australia because they had good financial results and their employees wanted the pay cuts back that they had previously given. So at this point, to be doing a layoff and a pay cut of this size is pretty substantial for KPMG, but it doesn't amaze me about KPMG. As we said before, when I was previously speaking about KPMG, I said that they should be the last on your list because of the things they do like this. It just doesn't make sense to be doing this at this time. Their financial release, it's interesting they do it right now, right? Because I know that KPMG's fiscal year end is actually today, September 30th, 2020. So that's probably why they did it. They closed the books and they had this in mind. They had this planned out. They probably wanted to do it sooner, but the economy is recovering from a stock market perspective, but economists don't like the way it looks. Like when we went through PwC's revenue release, we heard PwC's economists saying that they expect the economy to shrink by 5% all the way through 2021. So KPMG probably had a similar position and just decided to get rid of it. And the percentage is around 4%. Which is similar to what Deloitte did. Deloitte did 5%. So they're probably doing the same thing. And that would line up with PwC's forecast of a 5% shrinkage in the economy. And the spokesperson that Business Insider referenced said, while our business fundamentals are strong and we continue to be optimistic about the future, we must also be realistic about the uncertainty that exists in the marketplace. For that reason, we are taking prudent action to better align our resources with client needs and demand. And the breakdown of employees by line of service is 194 tax employees, 189 audit employees, and 396 advisory employees from the U.S. operations. And again, there's also going to be a pay cut for 125 tax employees. So what this shows is that advisory is struggling the most. And we know that because of discretionary spending in large corporations. Whenever there's a downturn in the economy, they're always going to cut consulting projects that they thought they need because they no longer have the money to do that. And this is for all people out there that are thinking about going in consulting. You see the biggest cuts are coming in there, so you might want to go into something else. Audit is losing the least amount of employees here because people need audits no matter what, especially if they're trying to raise money during a downturn. And the article also mentions that Accenture reduced their workforce by 5%. And Accenture is a consulting company that competes with the Big Four, and they're consulting focused. So it seems like all these professional services firms are reducing their headcount by at least 5%, whether they make it public or not. So that's something to keep in mind. And this is ongoing. As the forecasts change, I'm sure they'll adjust accordingly. So this is a shocker. It's late in the game compared to all the other ones that have done these measures. It's very interesting to see this done now. But that's the update for today. To get all the news that comes out about this and future news stories similar to this, make sure to subscribe to this podcast, subscribe to our YouTube channel, support us financially through the Buy Me a Coffee link in the show notes. And if you can't do that, like the video on YouTube, subscribe, and comment. Thanks for listening.